Good morning, welcome to the Market View for Monday the 21st of July 2014. And going back to Thursday of last week, and there we can see Thursday of last week in the 30-minute GBP, the market traded sideways to lower and finished up finding support at the 171 area. Prices didn't do an awful lot, it was about a 58 pip trading range for Thursday. Then the overnight remained fairly quiet, and then on Friday we see the market moving sharply lower. Unfortunately not filled in the 30-minute, but if we have a look at the 60-minute we see 20 pips there, and also in the 60-minute for Thursday as well. You can see the buying coming in on the 60-minute there as well, down at the support 2 level, and prices coming back up as well. But let's just go back to the 30-minute, as this tends to be the preferred time frame, although if there's a signal in the 60 and not in the 30, that's the idea of having the 2 time frames, so that at least you can pick up the trade in the 60-minute chart as well. So we can see, again, same thing here, unfortunately not filled. It's an 80 pip range from this high down to this low. You can see the 50 pips between the 2 grey shaded lines there. And again, you can see a huge amount of buying coming into the market at this level, which brings the market back, and prices have been trading sideways ever since. In the daily chart, so we can see that we've had a bit of pressure to the downside during last week. We've got Wednesday, Thursday and Friday all moving lower, trading down to the 170.50 area there, and finding support before coming back up to the 171 area, which is where we're trading at the moment. So price is still stuck in this sideways range, albeit we have got what are known as lower highs, so there is pressure to the downside at the moment. In order to move back to the 170-150, the market needs to trade up to this grey shaded area. But at the moment we've got this sort of falling over of the price action there. So let's just mark up a couple of areas of where the market could trade to. So from the recent high to the recent low, this takes us back to the 171.52, so the 171.50 area is where you're likely to see resistance to the upside, and also 171.30 for the 62% there as well. In the news for today, well, we've no news, but of course we have the geopolitical aeroplane shooting down in the background of last week. And as I said in last week's market view, as soon as I go away for a day or something happens, and unfortunately and tragically this event occurred, which we'll see what the effect was on the Dow in just a moment. So no news today for the currency markets. A very quiet day, so it's like I say, it's probably the markets are likely to move today on any sort of geopolitical events and news that comes into the market. In the Dow, we can see that Thursday there, you can see the market trading down sharply and then reversing and coming back up on Friday. So even such a tragic event and the potential for all sorts of conflict, whether it's military or not, the Dow seems to have ignored it and said, okay, well, yes, this happened, but let's move the market back to the upside. A couple of interesting things here, though. We've got buying coming into the market. We have some potential weakness. The market then manages to close above the high of this potential weakness on Wednesday. Thursday, the market moves all the way back down, breaking the rising lows there. And again, you see the selling coming into the market, and now we're seeing this reversal. But this is an interesting picture, because we've now got 4 consecutive days of an increase in volume, which we've not seen. The market's been going up on low volume, and if I show you this in the monthly chart, you'll see how this has been during the last several years. If we go back to 2009, you can see there that we definitely have a decreasing trend there in the volume for the Dow. So this market has been going up on fresh air, and then all of a sudden last week, we switch back to the daily, you will see that we've got this situation of volume for the last 3 or 4 days, and it'll be interesting to see what happened on Friday when this is confirmed. And for those of you who don't know, the volume is withheld, the real volume, that is, not tick volume, the real volume is withheld from the general public 1 day in arrears, because it's a privilege of those who pay for a seat on the exchange. So we won't know until around lunchtime today what the official figures are for the Dow, but it will be interesting to see what happens tomorrow as far as this bar is concerned. What also is interesting here, if you take this bar from Thursday, and if I just draw in a 62 and 76 for you, you can see the market stopped at the 76% of this professional selling bar. So in order to move higher now, the market needs to trade through 76% and then through the 17151.56, which is an all-time high. On the implied volatility front, we saw a spike in this on Thursday for the obvious reasons. We saw the IV, the implied volatility, moved to, well, actually came back to 915, because if you look down here, you can see we had the spike the day before and shooting up there to around about 11%, but then when the Dow discounted what had happened or ignored it, then you can see that we've now dropped back down to the 915 level, and 7.21 for the historic volatility there as well. So it's we've had this tragic situation in the background. Not that I would gain any pleasure whatsoever from trading off the loss of anybody's life, but there was a situation, as you can see, that the Dow has chosen to now factor in and ignore, and has resumed normal service in moving back towards the upside there. So it's a case of being able to see what happens during the next couple of days as the market unfolds, whether the market's being brought back onto the highs. But the volume shows a classic sort of distribution type of activity where, a down day and the market is actually bought back, and prices go on to form a sideways channel. So maybe we're starting to see this sort of distribution phase occurring, because this is the first time we've seen. And just to remind you, let me just go back to the Dow chart. We've got this 4 days of volume alternating, of course, from buying, selling, then the market being bought back, and then selling, and then on Friday the market rising, but we haven't got the volume yet to confirm if it's buying there, but it's certainly an interesting pattern. So last week, this sideways pattern of toing and froing of buying and selling, and each selling day you see the buying coming back into the market. So there's something we want to pay attention to from this point forward until we see the volume disappear, if it does. Right, well, that's it from me for today. That's brought us up to date from minus Friday's market view. All things being equal, I will see you in tomorrow's edition of the Market View. As ever, thank you for your support. Very much appreciated. And as ever, thanks for watching.